Australia's Reserve Bank is once again tipped to raise interest rates when it meets tomorrow. Market watchers are wagering another 0.5% increase, which would send shudders through the real estate industry already on the slide. Roger Maynard has been testing the temperature of the Sydney property market.
1, 2 and 8, 5. It goes now. This is a monopoly. We play for keeps.
It's a tense time to be selling houses. Prices have plummeted by around 10% in some areas, and economists fear there are bigger falls to follow. At this auction in the western Sydney suburb of Greystanes, it seems the entire neighbourhood has turned out to see what price this renovated bungalow sells for.
I think the market has finally realised or normalised, so I think the knee-jerk reaction that we saw earlier in the year when interest rates were going up has now been put into the thought process and digested. So I don't think buyers are spooked anymore. They're coming to market, they're seeing value and they're bidding.
Across the other side of the city, in Sydney's Upper North Shore, fewer people have turned up for the auction of this 4-bedroom home, which has been in the same family for 30 years. While the Sydney real estate market is usually one of the clearest indicators of where the Australian economy is heading, retail spending and the rising cost of living also have to be considered. The early signs are not encouraging. With interest rates almost certainly about to go even higher, there is growing talk of an economic slowdown.
Oh, I think that we are pretty much in a recession, even if you don't think about it as a formally measured one already. And I think that was inevitable regardless of what the RBA would have done. And the reason is that that recession was caused by our mismanagement of the COVID period for 2.5 years. That caused all manner of disruption to normal economic activities, consumption, investment, trade of all sorts. And of course, that's going to have an impact. Like I say, if you ruin the economy will get ruined.
Strangely, the chill winds of a slowing economy have not been felt in the shops. Retail spending has remained buoyant thanks to consumers saving their money during lockdown and splashing out to celebrate their freedom afterwards. But cracks are appearing, with a Commonwealth Bank economist warning that if interest rates rise too quickly and too far, it might trigger a serious downturn with further falls in property prices. But it's not all doom and gloom. Australia's resources are enjoying a bumper year, with soaring coal and mineral exports as well as agriculture earning billions from higher international prices caused by the war in Ukraine. In June, the boom in commodities drove Australia's trade surplus to a record $17.7 billion.
Are we done?
Back on the front line of the Sydney real estate market, the top offer for this home has hit $2.5 million. The agent is well pleased.
Great price. It was $200,000 over reserve.
200 over the reserve?
That's right.
The market's on the move and it moves away from you now at a rate of knots. At the magic million.
On the other side of town, the auction battle is hotting up, with every last dollar being squeezed out of the 23 registered bidders. It eventually sells for close on $1.3 million, a satisfactory result in an unpredictable market, which reflects much wider economic concerns. Some industry commentators say property prices could drop by another 10% or simply flatten out. Nothing is guaranteed in these uncertain economic times. Roger Maynard, CNA, Sydney.